Hello everyone and welcome to my morning report chart analysis videos on Friday the 25th of January with me, Richard Perry, market analyst at Hantec Markets. We've got a fairly risk positive move for markets today. It's interesting that we're seeing this despite the fact that Wilbur Ross, the US Commerce Secretary, suggested that the US and China were miles apart in their negotiations. Markets are still fairly risk positive, and that's coming on through some decent numbers on earnings season in the States, and we saw S&P 500 a shade higher overnight, but the futures are up early morning today, and that's certainly helping the European markets. Look at the DAX performing strongly. Now this is an interesting one, actually my chart of the day, FTSE 100 underperforming, as we've seen sterling, which came stronger overnight. Actually we saw sterling coming stronger, significantly stronger again yesterday and through to today, in the fact that we had reports in the UK press that apparently the Democratic Unionist Party, who tend to support Theresa May, are actually sort of contemplating again supporting her, even though they have been historically against her deal for the EU. So that's subsequently helped sterling higher, although those strong early gains have dissipated slightly. But still what we are seeing across the board is positive risk. That's helping to just drag the dollar low. We saw the dollar jumping high yesterday. I mean, that dollar index jumping higher, I should say. Was that stronger dollar? Not really. That was mainly on euro weakness. Euro was very weak yesterday on the back of the flash PMI data, which continues to deteriorate, and also the cautious outlook from the ECB. This morning we've had the German IFO data. Again, German IFO numbers don't look especially positive at all for the Eurozone. So you can see that here. So yeah, it doesn't look all that great, and we've got that coming through today, which is generally going to be euro negative, I think, coming through the line. We'll see how the charts are going to impact on that, but certainly that would be the suggestion. Risk positive has helped US Treasury yields higher, but again, limited real direction through that, and the dollar has just sort of stabilised a little bit from that jump higher on dollar index yesterday. So in terms of data points, German IFO was pretty much it today. Again, the US government shutdown is sort of limiting any data points out of the US, so no key data points this afternoon. Takes me to my chart of the day, which, as I said earlier, was FTSE 100. Now, FTSE 100 has broken this uptrend, this recovery uptrend, and it now is threatening a double top, which would give you around about 200 ticks of downside if completed, because 6,800 is a key level of support. Tested yesterday and held into the close, but again, I think the fact that we're trading underneath the old pivot lines, 68.50 to 69.10, that is now a basis of overhead supply. Resistance area kicking in around 68.50 again today, limiting the initial rebound that we've seen. 68.58 is the reaction high so far today, as the market then subsequently fell over. So it certainly looks as though that market is sort of positioning for a correction, and the reason I'm saying that is look at the momentum indicators. Stochastics definitely calling for a downside break. MACD lines on the brink of a cross lower around neutral, and the last time we saw that was back in October, when the market was sort of falling sharply. So we've had these three down days, three negative candles, and a close below 68. Big figure, I think, would be a really negative move. That would take you below all the moving averages again, and would really be a disappointment, I think, there for the bulls. You've got the hourly chart, which again, as I said, shows you support, pivot actually around 6,800. Not especially negative yet on the momentum, although it'll be interesting to see if the RSI starts to sort of roll over around 50 to 60. That would be negative configuration. MACD lines ticked higher, as have the hourly stochastics, but again, you're into resistance zone now, 6,850. again a bit of a near-term pivot, but it was also the longer-term level as well, up towards 6,910 as a basis of resistance. So yeah, I think this is coming into the realms of rallies being probably used as a selling opportunity now on FTSE 100. The strength of sterling, just as an aside note, the strength of sterling also doesn't help FTSE, and that's one of the reasons why FTSE is such an underperformer today. So I wish you good luck in your trading today, and I'll speak to you later.